Hi, Warriors. Kevin Brock. How's everyone doing today? So Monday morning, I came in here with a narrative that I was thinking about over the weekend, which included Arena, DJ, top and stock indexes. So you never know if it's the top or a top. It certainly was a top. Decent break there, right? I was talking about the dollar would have to hold and begin to rally. That's happening. We start getting through 93.87. It's going to look pretty good. Out of the currencies, my preferred short was cable, was looking iffy yesterday, looking better today. And out of the metals, which were part of that scenario too, to short, silver was the preferred short. And today is a perfect example of it being down 1.7%. with gold being down 0.4. So also EG was part of it. And, it's not confirmed yet, but it's certainly looking better than it did yesterday. Okay, so, I mean, we have some nice divergence. The 2-week off number is at 90.57, so we're there. We start getting back over 90. The early morning highs, 90.85, I expect some type of continuation to the upside. So, shoot, I didn't trade everything, but had a couple of positions to express it, mainly in cable and EG and some VIX and some individual issues. I've been showing this for a few weeks now, that a lot of these high flyers were putting in failing rallies or potentially right shoulders. There's Apple. There's Microsoft failing from 78.6. Here's Google. Couldn't even get to 61.8. Okay. Amazon didn't quite make a new high. Pretty ugly day yesterday if that was Amazon's big splash that they had. And Facebook looking pretty ugly. So the ETF I was talking about, take advantage of a decline, was Quid. And anyway, that's what's happening. So just a quick update on grains. It looks like the beans are going to come in a little lower. They may have one more push up, but I'm advising position traders, long-term traders, they'll be in to wait for a risk-off event. And if the dollar rally follows through, that you could, look to be a buyer of beans on a pullback. This is the ETF, around $9. Corn maybe around 350. I mean, all these grains have broken out, so we're just looking for a pullback for, the second wave pullback and then the money wave. And wheat looking pretty good too. Maybe you get a chance to buy it at 540. So those are the grain ETFs that I'm following. Hope everyone's had a decent week with the day left. We'll see. I think some off numbers were triggered, but not in indexes. So let's see what the dollar does. I still think there are plenty of people to squeeze. I know that DSI has had euro around 70 or so, got down to 60, but sentiment wise, I think there are more people bullish euro than cable. And cable, this is could just be the start, right? There's your daily. So we had this bad candle 2 days ago. Then yesterday I got short a little early at 90 and it went to 30.50, 29.90. And look at the day we're having here. So pretty ugly. Let's look at the week. The 2-week off number in the pound is 29.35. So right now we have a 2-week reversal, and I'm thinking that after this break here, you could almost look at cables being some type of bear flag, and I think these lows will give way. We could see 24 to 21 down the road. Yeah, euro's weaker, right? But cable's going to, in my view, that's why I'm bullish EG, is that cable's going to be on down days weaker than the euro, and on up days, euro's going to outperform as well. Yeah, the VIX has a little gap up right here. Here's your weekly. So you have a, we need it to close over 29. 29.80 is actually the number. Steve has shown this. We get through this, Steve's looking for, maybe 40-ish. So we'll see if we could break out before the end of the week. And that's it. We have George with us at Harmony Trader, and he exemplifies, he's almost like an athlete. To trade, he's an athlete. I mean, he puts a lot of emphasis on health and psychology and meditation to be in a peak performing state. So stick around for Mr. Harmony at the top of the hour. And here's someone that can sing in key once in a while. My buddy Blake Morrow. Do you have a tune for us this morning, my friend? I heard you used to sing.
Oh, dude, I don't sing.
You can't sing.
I don't sing.
You used to sing on the Morning Edge, people used to say.
Just the Smurf song, but that's different. The Smurf song's the...
All right.
I would sing it just so...
You did some type of Greek chant or...
yeah, well, we would do the... if I really thought a currency pair had reached a level that was like a gift...
Yeah,
it would be the Greek gods singing in church, but I could do that too. But I have to feel it,
All right, I know.
But
you gotta be inspired, man.
I would do the Smurf song just to put it in your head, just to piss you off. Is what I would do. I know, seriously, because I mean, there's nothing worse, and I'm sure you've done this. You've been around, and wow, the euro's actually flushing through 117 here. We have support at 117.
Go ahead, bro.
94. No, I'll actually show my screen right now. But
all right,
there's like nothing worse than when you're going throughout your day and you have this like song stuck in your head, right?
Oh yeah, I know.
Yeah. So when
you're gonna do that,
just to piss people off, I'd be like,
I know.
La 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 la. So then next you start thinking Smurfs all day. And,
oh wow, that would throw me off.
I mean it sucks because now it's stuck in my head all day, and I'm just thinking Smurfs and little.
Yeah, I've had people say they've had to go to a hypnotist to use less leverage out of their head.
All right. Well, hey, real quick, like if you look at the euro dollar, let me just show something. So this is 127% extension of this move higher. This is the 618 of the low here to the high. So if the euro is going to catch a bid, it's going to be right here. Matter of fact, what I'll do is I probably won't risk a whole lot. I'm just going to pick up a little bit right about. Let's see if I can get hit on a bid. I'm not going to stick around too long. But hold on. I don't know if it's going to do it for me. Yep. Here we go. Okay, so I actually picked up a little bit of euro dollar here. Now the reason why, let's just show you. This is of the low here to the high. This is 127% extension. This is also the 618 retracement of this entire move. So we're at 116.95. I won't give it very much, you know. As a matter of fact, I might as well do this right now. And just move my, oops, crap. So I don't want to risk too much here. I've got a really tight stop in. Like when I say tight, I mean I'm only risking a few pips because if it breaks this 85 level, then next thing you know, you're going to be trading down here at 116.60, and I don't want that to happen. So I literally picked it up right here where we're currently at, and I'm just going to try to take it for a bounce back up towards the 117 level. So but it's very intraday, and it's a small position. It's not anything too big. It's about a third size that I normally trade. So whenever I trade the little situations like this, then it's going to be, especially when it's counter trend, I'm trying to pick some sort of bottom or the top. I'm going to trade a lot smaller than I normally trade. Last night I was, and one of the reasons why, just so you guys know, one of the reasons why I'm a little bit more lenient this morning going counter trend is I was short pretty aggressively the Kiwi dollar overnight. If you're part of the ForexAnalytix community, you knew that I was short the Kiwi. I was shorting it in the 70s and 80s yesterday. And so I had a really good position size, and I got limited out at 66 cents. Also, I was long some Canadian, the dollar Canadian. I got out of that at 132. As you can see, we're stretching here. We're going to get towards this trend line resistance. That's going to come in right around 132.30. We should, make our way up there. So we'll see if we can stall up at this this resistance, and that's also previous support, should act as current resistance as well. So that's something to think about as we're entering the North American trading session, is that you're going to start to see, some of those. In my opinion, you're going to start to see some of these levels get tripped, and it's going to be probably pretty, might get a little volatile here. Now, a couple of things in my view that have happened overnight that are big is, first of all, you had the dollar recovery, right? But you're also approaching that 94 level. And then you're going to, hold on, let me see if this euro is going to bounce here. We're trying. If we can get back above 117.05, that's when it'll start to squeeze. And by the way, just really quick, since I've got you guys here, and we're kind of paying a little bit of attention closely to this moves that we're seeing here, guys. If you guys haven't tried out ForexAnalytix, make sure you do so, because if you just take a trial, it's only $1 for 10 days. You can come in and hang out with us in the chat rooms, because this is what I'm doing all day, is doing things like this. What you're seeing here, just kind of talking everything out. But also, if you haven't checked out, if you're outside of the US and Canada, if you haven't checked out Pepperstone Securities, one of the biggest Forex brokers in the world, if you open an account with them and do some trades, you can actually get ForexAnalytix for free for several months. So you have to use this link here, and I would do that. And then also, if you're in the US or Canada, wait, hold on. What happened to where did our
yeah, we're making some changes. It's going to come back there soon. But
oh crap. Okay. Yeah. Well, make sure you guys talk to Forest Park FX and just tell them we sent you. If you guys don't get a cashback rebate on your trading, if you're in the US or Canada, then you should. I don't know why you don't. And you have to talk to Forest Park FX. They've been our webinar sponsor for many years here. So
they can use the email address brokers@forexanalytix.com.
Oops, that's not the link that I wanted to do really quick. Do we have that here, Steve?
Not at the moment.
Whoa, what happened?
There it
yeah,
is.
right here.
The email is there. Yes, not yeah.
Email's there. Okay, or you can click on this live chat right here, and that'll get into touch with them as well. So if you're in the U.S. or Canada, just tell them that we sent you, and say, hey, I want to get cash back on my trades, and they're awesome. I mean, like I said, we've been working with those guys for years. Okay, sorry about that. All right, so let's go ahead and
do the bias chart.
Yeah, we're going to go into the bias chart, Dale. So, I mean, we might as well start with the euro, right?
Yeah.
I mean, I think the euro has support here. I think the euro has a lot of support here. And actually, we might go even a little further to right there. And the reason why is you can see all the spike highs, the low right there that comes in at 116, roughly 116.80. Although we might have support here because of that confluence. You guys know why I was picking up the euro here.
Yeah,
that's the whole reason why. So 116.80 is support. Okay, resistance is going to be any move back up towards, well, I'm not going to write down 117.25 because I think that if we can squeeze, we might get back towards 117. You know, what is that? 117.60, 117.50. So, and I do think we're range bound for now, and I think the market's getting a little
nervous.
No, I think the market's getting a little bullish. The dollar right now. Yeah. I mean, they really are overnight. So just, you know, I don't want to.
It's on the verge over 94.
Yeah, I think at 94 is going to be resistance. I don't know if today is going to be the day that we actually break out.
Yeah.
You know, I'm a little bummed out that I took some profits off the table, but you know, still, I you know, it's better to book profits than, you know, to not. So.
Yeah.
All right. So here's the.
Can't expect perfection at the crap table.
No, definitely not. All right. So here's the cable. Cable's under a little bit of pressure this morning. You know, I was asking Amanda in our chat room, and by the way, Amanda's in our chat room. For those of you that don't know who Amanda Sweeney is, she's really, really great trader, and you know, we're very fortunate to have her on our team. And I was asking her about her opinion about, you know, Brexit, and she's a little bit more dovish the whole Brexit scenario than I was, and so I think the point here is it kind of tempered my bullish thoughts about the cable. So and I was just, you know, probably a little bit more optimistic than I should be, I think. And, you know, and thank God I didn't take that optimism home last night, because I was short the euro sterling yesterday, and I closed it for a decent gain. And I'm glad I did, because, you know, here we are just kind of range bound. I think support today will be somewhere down here, which will be around the, let's just call it 129 level. And by the way, done. I just took my euro off for 7 pips. It wasn't a huge. Thanks. It was just, yeah, it was just a scalp, and that was
get the day going.
Huh?
To get your day going.
Yeah. Well, actually, I had a great overnight, because I made this overnight, and it was a pretty sizable position, so I made that overnight. So that's why.
It's like an athlete. You know, they don't feel they're in the game until there's some contact.
Yeah.
And they have 4 quarters to play, you know?
Right. So, you know, anyway, it's just one of those situations that, you know, it's now that I've booked some profits, I'm good. So going back to the cable, let me go back over here. Support's at 129. Resistance is going to be 130.50. I do think we're range bound. All right. You guys still hear that Smurf song?
Unfortunately.
I know Andre's going to be here
Blake.
today. What? Damn you!
Ziggy texted that he recorded it and used it as a ringtone on his phone.
He did. I remember when he told me that. All right. So the Aussie, kind of similar situation. And by the way, one of the reasons why the Aussie is so weak is the RBA is talking about bringing rates down to where U.S. has them 0.01%, 0.1%, kind of the Fed range of rates. And so the Aussie got smashed. And then even with the stronger jobs report, or better than expected jobs report, I should put it that way, the Aussie still is under pressure. I do expect us to find some support down here around the 70.50 level. And then resistance is going to be back at 71 cents. So I do think that the Aussie, as you guys know, is bearish. 70.30, 70.50, we are bearish. And I think if you get a rally to 71 cents, you have to use that as an opportunity to sell it. I think that's the way you trade it. Let's see here. Kiwi. I got limited out overnight at 66 cents. The reason why I had my limit at 66 cents is because that was the 161% extension of yesterday's move. The reason why we reversed yesterday and I sold some more Kiwi at 75 right here yesterday is because we had a false breakout. So that false breakout, and you can see the wedge too. I'm going to delete that. The false breakout led to the reversal, and that was kind of the trigger yesterday. That was the cue in yesterday to the reversal. You know, and so I was short the Kiwi overnight. I did put in a limit at 66 cents. I do think that we could come down and test this trend line, which comes in, let's just say roughly 65.70.
Nice trade.
Thanks.
I remember you saying yesterday when you were going over Aussie, you said, you know, you're bearish Aussie, and you said, I'm bearish Kiwi too. Right after that, you know, because it hadn't broken yet like Aussie had.
Yeah, and if you guys didn't see this, this is how I look. This would be yesterday in our chat room. This is I just want everybody to know this is how I view the Kiwi dollar longer term. I had to change the chart over here. I think we're developing a head and shoulder pattern.
Nice.
So remember the multi-year trend line here. This is like almost a decade. I mean, that's from 2014, right, to 2020. That's 6 years. So the better part of a decade. Anyway, that trend line is broken. So that's
be back, Blake.
Huh? What?
I'll be back in a minute.
Okay, that's keeping us supported. But if the Kiwi starts breaking below like 65 cents, I think the risk between 65 cents to, you know, 64.50, this is going to be pretty big support. But if it breaks that, you know, Kiwi longs are in trouble. And that's something that I'm just kind of keeping an eye on longer term. One of the reasons why I've got more of a bearish spin on this. Okay, just so you know. Let's go to dollar Canadian. So Dollar Canadian, I was long this overnight. This as well had a nice little inverted head and shoulder pattern. If you guys weren't watching, it looked like that, you know, or a rounded bottom, however you want to look at it, but it's already complete. So it's already done its business. And when it broke 131.60, that kind of did the trick. Resistance right now should be at 132, 132 and a quarter. I do think we're range bound. I think any dips back down to 131.50 should find support now. Dollar MEX. This is one thing that's got me a little nervous about the dollar strength that we're seeing. And by the way, the damn euro is still bouncing. I should have held on to that, but hopefully you guys did well with it. The dollar Mexican peso is not falling through to the upside, and that made me a little nervous. And so with that being said, this is one of the things that was making me a little nervous about the long dollar trade, is that, you know, you don't have this emerging market currency come with following suit right now. Then also I fear that, you know, the stock market right around these levels, you know, since we're not making a new low here and we're finding support at this is the previous resistance at 34.45. And I mean, read this. Oops. The S&P continued to, I don't know why my typos are so bad, continue to trade lower, forging a lower high, and the 34.45 level, which was resistance, may come back into play as support in the day ahead. Here we are, and you notice the lows are 34.42. I have a feeling that we're going to be finding support here. So, you know, you got to be a little careful about being too aggressively short equities. If we do break back below, you know, this level right here in the S&P, which comes in at, I'm going to write 34.30, and I'm just going to go ahead and jot this down really quick. If we get below there, then I think that, you know, the market's going to really start to pull back. But for now, any rally back up towards 3,500 should find resistance. And I do think we're range bound. Okay, going back to what I was saying about the peso, the thing that got me a little nervous about dollar longs is the peso is just kind of struggling on any type of recovery. The dollar Mexican peso will trade a lot higher if we're seeing real risk off, and we're not right now. So resistance right at this moment is going to be 21.75. And support
attendees pile in to see your bias chart.
Huh?
A lot attendees pile into our room to see your bias chart.
Also, we have numbers in just under a minute, Blake.
Oh, we do?
Okay.
Okay.
That was more warning than Stell usually gives.
That's because
thank
I'm
you,
awake.
Stelios. He said, you know, I think he's so sick of me harassing him. Because I keep harassing him, like, you know, why don't you and I should put some of the blame on Steve. Why don't you or Steve come tell me that we got data coming out? We got Philly Fed, initial jobless claims.
DJ says, I'm here for the silky smooth voice. That's not me then.
That's right. That's right, DJ. I'm glad that you're here with me.
What a radio.
And the impromptu yawns too, yeah. Okay.
What are you wearing, DJ?
Oh my God. You got Steve going.
Sorry.
Yeah.
All right. Jobless claims a little worse than expected.
Tinder.
Now, now do that for a
DJ
girl
said
that will
nothing anymore.
permanently shut down.
Well, hello, DJ. All right, guys, I need to finish up this analysis.
Yeah.
I'm going to get over to the. I got to get over to the. All right. So Philly Fed came in a little bit. Wow, actually, a lot better than expected. That like a lot of mixed signals here. I do think the jobs picture is going to worsen. You know, but that's how I feel. Just I don't, you know, you know what's scaring me, guys, is the European COVID data. I really don't think we're going into lockdown anymore, but you know, I think it's gonna the you know, second wave, if you call it. You know, I do think it's gonna get worse. I'll give you a good example. I have my best friend that I've grown up with, joined the military with. I think I mentioned to you guys, he got COVID, and he's a triathlete. He's like he's a guy that will drink a case of beer with you, and then the next morning he'll get up and go run 15 miles without even breaking a sweat. And he's 49 this year. And then he'll, you know, he does triathlons, but he works hard and plays hard. He's that kind of guy, and he's built like a machine. He always has been. He's that friend that you always has a six pack, and you're like, you eat 3 hamburgers a day. How do you have a six pack? You know, he's that kind of guy. He got the coronavirus, and he was down for like 2 weeks. Like he was out of commission, sleeping 15, 18 hours a day. And I was talking to him yesterday or day before yesterday. Yes, Tuesday. I was talking to him Tuesday. And he's like, man, I woke up this morning and he's had a hard time actually breathing since having COVID. This has been, you know, 2-3 months now. And he hasn't been able to run. Yeah. It's like he still coughs. So you can tell he's got some residual.
He's a long hauler, they call him.
Yeah. I mean, you know, whatever, you know.
Yeah.
But he's like, you know, he's like, I woke up this morning and I'm sneezing and I've got, you know, I'm snotting all over the place. He's like, he's like, I'm not sure if I've got COVID again, if I got the flu. Like my body's starting to ache, and I'm like, ugh, you know. But that's the problem, is we're heading into flu season, and then you get people that are, you know, you don't even know what you got, right? I mean,
yeah, that's right.
You don't. So anyway, Swissy. I do think the Swissy is going to have resistance at 91.70, then 92 cents. Support will be right here at 91.15. I'm just quickly doing this for you guys because a lot of these numbers haven't changed. Dollar yen's been trading heavy, but we've held the 105. The 105 level. The 105.05 is the 50% retracement, but I'm mostly concerned right now with this support, which comes in at 104.95. So I'm going to write down 105, but I think this is all very, very critical down here. Basically 105. It needs a hold as support. Any rally back to 106 should find sellers. So the way I'm going to trade the yen is any move up like that, I'd be a seller. Any move down like that, I might be a buyer, but I think you got to leave it for the range. I think it's like 106.10. Dollar index 94 cents is going to be resistance, right? All through here, this is like the resistance zone area. Oops. Yeah, right through here. Okay. Somebody asked if Amanda traded for a bank. Yeah, Amanda did trade for a bank. And what bank did she work for? Stelios would probably remember in the UK. She's always in there talking about like stories from the trading floor. Stelios, do you remember? 93.20.
No.
You guys actually know a lot of the same people too.
Yeah, we do. Yeah.
Yeah, which a lot of the same trader people from the trading floors. But I forget what banks you work for. I don't know.
Barclays, I think. I might
No,
be mistaken.
I don't think it was Barclays. I forget. Anyway. Let's see. US dollar, Norwegian krona. So remember we wrote down resistance at being 940. Well, we're there. So I do think this is pretty key resistance. I mean, if you really want to short the US dollar, Norwegian krona, this is the place to do it. Wait, what just happened? Hold on. Do we get Mnuchin will speak to Pelosi today. That just kind of gave us a little bit of a jolt. Not much, but it the equity markets are bouncing as a result right now, guys.
The gap seems to be closing. I think now the difference is at 400 billion, 1.8 versus 2.2.
Yeah, yeah, I mean, it's still a lot of money. The gap is still a lot, you know, it's not chump change, but
well, Pelosi's getting heat from her own party to do something already.
Yeah.
Democrats are coming out and saying, you know, I know you want a perfect deal, but our constituents want a deal. So that I saw that yesterday.
Yes. Anyway, let me finish up here. US dollar, Norwegian krona. I do think that this is good resistance. We should have support at 925 again on any dip. If I bought, and I didn't, but if I bought the US dollar, Norwegian krona at 925, and you guys know that I've been more leaning bullish because of this, you know, this hold, the hold that we had here on dips. I'm more bullish. The US dollar, Norwegian krona, I'll get really bullish above the 200-day moving average. But if I was buying it, which I didn't, I would be probably taking some profits here and, you know, reassessing. Because I tend to be more bearish these commodity currencies for the most part. All right, last but not least, I know we have Andre joining and Steve wants to say something, and I'm just trying to wrap things up, and I'm getting carried away singing the Smurf song. Steve wanted to hear the Smurf song one more time.
Absolutely.
No, I was actually joking, Steve.
Absolutely.
You're like, make my freaking day, man.
I remember in the good old days with cassette players, of course, when I was a kid, I had my father put on the Smurf song every single morning he was taking me to the kindergarten.
No way, did he really?
Yeah, and the poor guy actually did.
Oh my god. Oh my god. He really but it would stick with you all day, didn't it?
You have to grow up and become a father yourself to then realize the hidden sacrifices.
Right. That's like yeah, it's like when if you're not a parent, you don't know this. There's this it's called Kids Bop. Kids Bop. They take the popular pop songs in the United States, and there's kids singing these popular pop songs. They call it Kids Bop, and I really want to go Harry Carey on somebody when listening to that, but we do it with our kids, and I probably spent a good 6 years of my life singing those songs in the car with kids. Anyway, that was the bias chart. I'm done. Remember, guys, if you haven't tried out ForexAnalytix, if you want to come jump in the chat rooms with us, here we are. And, you know, that's us chatting all morning long. I'll go back to when I got up. That's how much chatting has gone on since I got up. I got up there when Amanda said hello to me this morning, 3:42. That was 2 hours ago. This is how much chatting has gone on in 2 hours. So if you want to know where I'm at all day with some of the other team members, we're in ForexAnalytix chat room. It's only $1 for 10 days. Come hang out. Talk to you guys later, guys. Steve,
Okay,
Stelios,
Blake.
it's all yours.
Blake.
Dale, Chowder.
Bye-bye,
By the way,
Thanks.
by the way, if you picked up the euro earlier and you hung on longer than I did, because I got out about 8 pips ago, I'd probably be selling it pretty soon as we get back towards the teens. This is where I'd be dishing it out. Just FYI. Okay.
Thank
see you guys.
Thank you, Blake.
Thanks.
Okay, we're going to have Andre in a few minutes. I have a couple of things to say very briefly. Nothing groundbreaking, really. The main themes, once again, Mnuchin yesterday said that, late yesterday, that getting something done on the stimulus before November, 4th? Whatever, the election is going to be difficult. So he didn't sound too optimistic. UK, Brexit, same old beep, 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 you know what? Both sides trying hard to show that they're really trying and really trying to get something, get something good done for their side. We're talking about this in the chat room, and I still think that in the middle of this COVID situation and everything, you really don't want to be putting another huge obstacle for both sides. It's not just the UK, the EU. It's not like they're going to escape, untouched and hey, nothing's happened. No, it's not going to be a good thing for either side if there's a no deal. So I still think there's going to be something. They might draw it out a little bit more. They might do their usual politician tricks, but I think we're not going to get a no deal Brexit. That's just my humble opinion. And also the other thing that Blake touched upon briefly is COVID itself. There are actually restrictions in cities. My friends in London are telling me that things are getting a little bit tighter and maybe preparing to get more tighter, whatever. And same in Spain, and from what I hear in France, some curfews in cities like Paris. So it's not looking great, and we're still not in heavy winter. So for people who think this is going to come and go, and there's going to be a vaccine and everybody's going to be cured, I unfortunately I don't think this is happening.
No chance of that. I mean, what I mean is, I said it the other day, Stelio. I was reading a report from the Germans, which said that even under best case scenario, until we have the vaccine and manage to populate to vaccinate enough of the population, it's going to be next summer, and that's the absolute best case scenario. So having to do with this year, this winter,
we have to grind it out.
Yes,
next winter, hopefully.
I mean, under favorable circumstances, we might have some normalization starting next summer. That's the best case scenario.
And our friend Alexander is saying same in Portugal, and we are seeing not yet, but I think we're close here in Greece as well. If things get a little bit worse, I think they're going to start enforcing. I don't know if it's going to be a full lockdown.
And the weather, for those that don't know, the weather here is still spring weather, right? I mean, we have 25 Celsius, and it has rained once during the past 15 days, so the weather is still
I've heard estimates here in the US, guys, we're averaging now back over 50,000 cases a day in the US, and they're talking about by January it could be as high as 300,000 cases a day.
Well, I hope that.
And keep in mind that all those numbers are not real numbers. In what sense? In the sense that a lot of people get it. They don't know it, and nobody ever gets to know about it, right? So the actual number of people that contracted
probably 10 times higher.
I don't know. I have no idea if it's 10 times higher, but it's multiple times higher. It might be 2 times, 5 times, 10 times. Who knows?
Yeah.
Okay.
Anyway.
I also want to say thank you, Jeffrey, for your very kind words. Jeffrey wrote, "Your webinar is the favorite part of my day." Well, mine too. Okay, I think we can. I think we can bring in Andre.
Hello, everyone. I'm here.
Only give him 5 minutes.
Yeah, I just need alpha minutes.
How many minutes do you need?
Alpha minutes. Hello, everyone.
Hey, Andre.
Welcome.
Andre, how are you?
What's up?
I'm fine, thank you very much.
Andre Picasso.
Olá to Alexandre Janeiro. I'm not sure if he knows I'm Portuguese also, so I welcome you here. And let me try to share my screen with you. Can I?
As the song says, let me entertain you.
Let me entertain you. Let me share.
Winter is coming.
This one.
I still have the Smurf song in my head, so there you go.
And you will sleep with it. You will sleep with it. Can you see my? This is the Bund, I believe. Yes, it is.
Yes, it is. It is. We actually, I wanted to speak about it if it wasn't you coming. We actually had, quite a move higher in bonds. A lot of people were like worried bonds are going to break down. I don't know. Looks to me like bonds are, sustaining, their bid, and I think that eventually we're going to see another move higher in the bonds. What do you think?
I think we have 3 levels to pay attention to at this point. One of them, a 176, 176.69 at the weekly fractal, previous structure highs, and then above the monthly fractal, above the previous higher highs at 179.71. So there are 3 levels that I will pay attention. The most closer one, it's 88% Fibonacci extension. So we are very close to that Fibonacci level. So that may put some pressure for the bonds, but not only, also the bonds also threatening the formation of a shark pattern. I shared this one, a 224% Fibonacci extension at the bottom. So the bullish shark pattern was projected before at 138.24. Nice bounce from that level, weekly and daily fractal reinforcing that support zone. And then I projected this bearish shark pattern at 139.17, which can also extend above the weekly fractal at 139.28. So there are 2 levels where I think the market may feel some pressure. Both bonds and bonds actually approaching a bearish potential or eventual scenario here. The DAX is now trading the golden Fibonacci. I was expecting to join yesterday the webinar. Unfortunately, we had no time yesterday. Yesterday we were trading this next zone for the DXY, a small edge and shoulders there. And I was expecting a violation of this structure in order to short this DAX, and we are now trading the golden Fibonacci retracement. So this was a shark pattern also shared among our community at ForexAnalytix. Obviously, in the section of harmonic trading, you will see that pattern there, the 168 extension projected there, and obviously expected behavior, at least a 38% fib as always. Then we should maximize profits as soon as the market trades the golden Fibonacci retracement level. The S&P also, I shared 2 different patterns here. Initially, I shared this potential shark pattern at 34.83, and then when the price starts to push a few points above, I pushed back and I saw this eventual cipher pattern at 78% fib. Actually, the Dale was mentioning yesterday the 78.6 as a natural pressure zone, and actually, as we can see, the market has been pushed a few points above to the 88% Fibonacci retracement, reinforced by a new fractal there, a daily fractal at 35.50, and then started to fall. So the default target for that pattern, 38% Fibonacci retracement, a few points above the monthly fractal resistance, which is positioned at 33.98. So 34.20, it's the default target, the 38% Fibonacci retracement expected for S&P, which will put the price trading the previous structure highs, and point B for the cipher pattern. So I want to see a retest of these previous structure lows. I was expecting kind of a double top for, actually I expected a few things here. One of them, and initially I saw this as a potential inverted edge and shoulders formation. I was expecting some more bullish momentum, which can happen. We never know where the markets, if the market will bounce or not, but there's also room for that to happen. I will not be surprised to see a rejection again of this fractal support level and the bounce from these levels. But we can see this V shape as a potential double top again. And obviously a violation below 38.97 will trigger that potential double top. And if that happens, we may see the formation of different patterns above, below actually. Initially, and the one at the trend line support a bullish bat pattern at 88% Fib. So let me tag those levels there. 88% Fibonacci at 37.06, and right below the alt bat pattern at 113% Fibonacci extension. So if the price decides to fail to bounce around this, actually around the daily fractal support positioned at 36.50, so the 36.50 should produce some bounce for the crude oil. If that fails, we may see an extension below to the 160.08 extension. Well, and that will not be a surprise after first swing low, a nice consolidation process here, and then a new swing low again. I have this projection for a while for crude oil at 31.15, the 38% Fibonacci retracement from all these previous structure highs, actually from all these swing high, the monthly fractal support at 11 to the $43 a barrel. So basically a 38% Fibonacci retracement at 31.15. It will happen in a slow process, and during that process, the price will print other events, other patterns for us. But the ones that I'm paying attention at this point, it's a eventually retest of this ascending trend line support if the market decides to trade below 38.94, so below the most recent lows, will open the door to print those patterns there. Gold, I published the bounce from the golden Fibonacci retracement level. So basically we have here a technical double bottom that was followed by the previous structure highs, and that was followed by a retracement to the golden Fibonacci. And I shared this as a 2618 trade setup. So I was expecting kind of symmetry projected from the golden Fibonacci. So I entered into this position in order to achieve my default targets above a symmetrical pattern. The price has found some resistance at 1933, so we are now inside this ascending channel, and eventually new lows will not be a surprise below this channel, and we have patterns at 1835 below the weekly fractal, which will take some time to, which may take some time to form unless the price rallies below these fractal support levels. Above, we have also the 88% Fib, and very similar to the previous pattern that I show you on the crude oil, 88% Fibonacci at 1959. So if the price decides to print a new high inside this channel, eventually touching this 88% Fib, that may offer some pressure. And then again, the 113% Fibonacci extension. And if those levels fails as potential resistance, we may see gold bouncing higher and eventually a retest of the monthly fractal above. It will take time to happen, obviously. Let's see how
you have a bias. On which way?
No, at this point, I have no bias at this point. I need
Good answer.
I need a decision below, at least below the daily fractal at 1872, if not 1848.
You sound like
fractal.
Steve Volge, Mr. Confirmation. All right.
I don't know. I don't know.
All right. You have a dollar index chart there,
Yes,
Andre?
we have a dollar index. I shorted this very sharp pattern at 94.54. Actually, extremely constructive, this chart for the Dixie.
Yeah.
We have that bounce from the 127, 113% Fibonacci extension, filling some of the criteria to form later that very sharp pattern above. So I shared these before the completion point because I want people to get time to prepare and to manage and to manage their risk for those events. So usually the very sharp pattern will not require a lot to invalidate. So if the price actually decides to break above those levels, usually the price will invalidate the pattern. We can see the price kind of respecting this Fibonacci extension, and then a fall to the 50% Fibonacci extension retracement here. I said, okay, this may print the bullish 5-0 sequence, which is this blue line here representing the sequence. Always as a sequence for the shark pattern. The shark pattern, if the pattern decides to target the default target, actually, it will print a sequence, the bullish 5-0 sequence in this case. So I was expecting a bounce around these 50% Fibonacci retracement level. So it happened, but at this point, I will not be surprised to see the formation of patterns above. So we have kind of a confluence, or let's call it a cluster box between the 78% Fibonacci retracement and the golden Fibonacci extension, forming the shark pattern or the cipher pattern. Actually, a crab pattern here, this blue one, these internal swings suggesting, if formed, it will suggest a retracement back to the 38% fib. So if the market decides to break above the 94s that we were talking about, the daily fractal at 93.90, we have a potential pressure zone at 94.45. But again, this is a limited short, eventually a retest of the daily fractal, synced with the 38% fib. If that happens, that may open a door for that short. But again, I will not say the market will sink from this reversal zone, but we need to take in consideration the default target for the pattern, which allows us also to identify the maximum risk for that trade. We need to put our stops in with the maximum 1-to-1 risk reward approach, that we need to set our stops right above the weekly fractal for the hunt.
You have any harmonic targets, Andre, up around 96, 97? Those are critical areas in my
96, 97.
Well, you're on a 2-hour chart right now, aren't you?
We have 96.63, the 224% Fibonacci extension, which will not surprise me at all, because it's the second level for the sharp pattern to work. And usually, if the market, obviously we need to break above the weekly fractal first, but if that happens, we will see 95.63 as a potential pressure zone.
That's a breakdown too.
And that may act as a potential pressure zone above the weekly fractal. But again, I need to see a wipeout of these fractals.
You need to see the whites of their eyes.
Yeah.
Or you fire.
Because Dale, I can say I can have a dozen of projections. I don't trade based on if I have a pattern here, I will buy the market just because I projected the market there. It makes no sense for me. I need to see the pattern formed, and that's why I like harmonic trading, because there's no ifs.
You have your triggers and you have to wait for them.
Yeah, you need to wait for them, and there's no alternatives. It's a but or it isn't. There is a pattern or there is not a pattern. And if there's no pattern there, I don't trade at all. So we have 1 minute to finish, and I want to finish with the Kiwi, and I want to show you a very particular chart that I shared among our community on September 28 for the Kiwi on a 4 hours time frame chart. This was the bullish shark pattern printed at 65.23. At that time reinforced by the daily fractal and above the weekly fractal support, a few points above at 64.88. So I want to show you the live chart for the kiwi. So that was the shark pattern that I shared at 65.23, a bounce from the 224% Fibonacci extension. By default, that pattern trades will target the 50% Fibonacci retracement, 66.54, as I mentioned before. And then a sink into an inverted edge and shoulders there. I shared also the possibility for a breakout above and the reinforcement of this channel.
Looks like gold.
It looks like, and if you see this chart that I published before on September, there is a left shoulder here. I believe there's a potential left shoulder at that time. So I saw this potential reinforcement of the neck zone, and I saw this bounce for the potential formation of the right shoulder. So at this point, this is the right shoulder, eventual right shoulder, as mentioned by Blake. So we are now seeing this as a potential right shoulder, and I will not be surprised to see a reinforcement or a retest of the weekly fractal or the daily fractal below, but we are also approaching the terminal bullish shark pattern, and this one is projected at this ascending trend line support. So we have this ascending channel reinforcing or supporting these lows. If reinforced again, actually the market is starting to react as soon as we approach that level. So 224% Fibonacci extension, if you want to nail that one, 65.72. If that happens, I will not be surprised to see a retest of the broken most recent support, the 4 hours fractal support broken at 66.33. So that will be the suggestion for the pattern if formed, but again, don't ignore the violation of the weekly fractal, which may put the price trading below. I shared this pattern before. Actually, I need to hide all these because we can see. I shared this 88% Fibonacci retracement as a potential pressure zone. Something needs to happen as soon as the price approaches that level. So in this case, we have seen the price moving sideways with new highs forming the head. So eventually we are seeing the formation of that edge and shoulders, and the breakout below the weekly fractal may offer a very interesting opportunity to go short. And that concludes my presentation for today.
Nice, Andre.
Okay.
Thank you, buddy.
Thank you very much, everyone.
You're an artist.
Thank you.
I am too. You know what kind?
Oh, you are a lot of kinds.
Con artist.
A con artist.
Yeah.
It's awesome.
Americans know that. Con artists. All right. Anyway, thanks, Andre.
Thank you very much.
All right. Nice looks. And George, I'm setting you up here now. Yeah, you could just shut your chart down, Andre.
Yeah, okay. I need to stop sharing, yes.
Yeah, that's it. Welcome back, George.
Hey, Dale, how are you? I don't think Andre got the joke.
I don't think he did either.
No, eventually I'm not. I'm thinking on something, but I don't want to.
Okay. Well, yeah, a con artist is someone who, like, misrepresents things, commits fraud. Bernie Madoff was a con artist.
Okay.
Anyway, I have a lot of friends who are artists, right? And I go, hey guys, I know you don't think so, but I'm an artist too. And they go, oh, what kind?
The con artist.
I'm a con artist. Anyway, so George, you want to share your screen?
Thank you very much, George.
Thank you.
And only be a truth teller here with
That's
what
right.
you're seeing. Okay,
absolutely.
buddy.
Here we go.
Yeah, see, Jane knows what a con artist is. She's dated.
Here we go. Here we go.
All right, George.
All right. So see.
George, I got your screen, and I was talking about how you really take, and I am Blake, how you really take trading as almost the same type of way that an athlete who has to be in a peak performing state to to do his job and excel on the field, that you do the same thing with trading, that you're in the zone. You have to be in the zone to be effective. Am I correct in how I'm describing what's an important part of your methodology is, the physical, the psychological part of this whole tough business?
Absolutely. And if I love reading books, and if you read about Mark Douglas, The Zone, he touches on that point in great details. And he pretty much talks about a holistic approach to trading that encompasses not only acquiring a high probability signal, but also looks back into the trader and how he makes decisions. And if you look at an athletes, they take every aspect of their craft very seriously. From the moment that they wake up to the moment they are practiced, they do actually visualization of them shooting the perfect basketball hoop over and over and over in their mind before they actually practice it live. And that will wire your nervous system in such a way that it becomes a muscle memory. And to be effective as a trader, it needs to be boring. Really.
Okay.
Routine is such a routine that you are expecting the following. You're expecting the signals to show up. You are expecting a flawless execution. Once you make that one decision of an entry, everything else that you're doing needs to be automatic without micromanagement. So this way, emotions does not seep into your decision-making process. And the art of simplicity is how I refer to it. And that art of simplicity has an objective. The objective is consistency, profitability, and longevity in this business. And the way.
So we're all human though, George. You ever blow it? Even though you're all prepped and everything, after the entry, maybe you have some mechanical things that reinforce your discipline. But I make a lot of plans on Saturday. And then when Sunday night, I'll see something that wasn't planned. And to me, that's an impulse trade when I do that, because it wasn't planned before. It's just something I saw. And, this kind of thought went into my head. Hey, you know what? It's a decent shot.
Decent shot.
Yeah. You ever hear that in your head?
Oh, absolutely. I hear it every single day. And
All right.
and the thing about that is, I don't know, somebody who's smarter than me said, no war plan ever survived first contact with the enemy. Because always the minute you encounter action, a lot of things start happening. And how I handle that is in multifaceted way. Is I start my day prepared very well for what to come. Once I start to trade, I have a very specific signal that I'm looking for, and I wait for that to happen. And once it happens, I get in there with that entry point, and the rest of the stop and the target is already figured out, and I try and I walk away. I walk away, because what happens is, if I stay in front of it, sometimes the pressure start to seep into you, and you start trying to save a trade from being a stop.
Right.
And that actually
cancel. You've done it before. Cancel if close. That's when
we
you
all
pull
did
your
it.
stop when it's about to get elected, and you go, no, it'll come back.
We all did it at some point. And then what I did is I looked at my result, and I found out that me doing that always ended up with a net negative for that behavior. So as exiting my stop is almost as a statement that I don't believe in the probability of my system. So if I don't believe in the probability of my system, then why is that?
What are you doing? Yeah.
What are you doing? Because that's another thing that I found out from trading. The minute you micro change one element of that formula, the trajectory of your P&L and probability will significantly shift. Sometimes positive, sometimes negative, but it would not be consistent. And you know, back to the art of simplicity is you are one of your biggest goal as a trader is to achieve consistency. Sometimes you are consistently a negative trader. Sometimes you're consistently positive, but you really need to achieve that aspect of your trading first. Then tweak it and improve it to where the trajectory is a positive one. So for me, I found that micromanagement is counterproductive, and you know, that doesn't mean that things during the day does not happen, but I have mental flags that I have in front of me, and I actually write them on my screen.
Write
them on my key, absolutely a key.
And actually, right, George?
Absolutely. And one thing is I actually make a video of all the best behaviors that I need to exhibit during the day, and prior to the morning starting trading, I actually replay that video.
You know, you brought up stops, George, and you know, I have a joke. Last time I used a mental stop, my first stop was a mental institution. And I recently interviewed Jack Schwager at our Trader Summit, and he has a new book out. I think you're going to like it, called The Unknown Wizards, Traders You've Never Heard of. And there was an example of a guy who made 500 grand off a 500 grand account and gave it all back twice. Okay. And Jack said one thing he said that he learned from that experience: he never, ever, ever will trade without a hard stop now.
Absolutely. And that is the Bible right there when it comes to trading. My job as a trader, and the job of every trader, is to manage risk, and the rest will pretty much take care of it. You have, go ahead.
No, I'm interested in what's happening technically on some of the charts that you have up there to the left, those two squares there. What are we looking at? Is that NASDAQ?
Okay, so I'm a specialist at NASDAQ 100. I mean, I pretty much trade that on a daily basis. And I've been doing that for many, many years. And basically what I'm looking at here, if we're going to go into that.
Okay, so they're all NASDAQ. And the one on the right was what, like a 1 minute tick chart? You're getting every candle.
Yeah, it's not, I don't.
They're Rankos, right?
Renko. So I deal in momentum and in movement. And when you always have to ask yourself a question: what pays you as a trader in the future market? Is it time or is it movement that you get paid on? You pretty much get paid on capturing the momentum and the movement. You buy it at 792, and you want it to go to 820. And once you capture that, that's money in your pocket. And that's so Renko charts actually does a wonderful job at capturing momentum and movement, and it shows you every segment of that fairly clearly. And I've been using that for many years with good results.
Can you explain the difference to our audience on why you prefer Rankos over, well, you have some wicks on your Rankos. A lot of Renko people are pretty pure. There are no wicks. So you kind of have a little combination of, you know, what might almost look like a candle and Renko combined.
Absolutely. And this is very specific to NinjaTrader and the system that we have here. And
Ninja.
NinjaTrader. So the beauty of this is actually it shows you the reversal, and it shows you price peaking and reversing, and that's what the wick is. In a Renko bar, a typical standard traditional one, you don't see that.
Right.
And that is actually extra information that I use in order for me to acquire signals to trade off.
So you look for wicks and reversals in the same block, same Renko block for possible turns.
Absolutely. So I'll give you the main signal that I use and the logic behind it and how I go around executing. So it's and part of what we're kind of teach our traders is reduce the noise in your trading and reduce your decision to a singular decision. So this way you can be consistent and look at one thing and one thing only. So this way you relax as your trader. Like one of the things that I do is I turn off the TV. I don't watch CNBC or actually watch the news wire as it comes. I 100% focus totally on that chart when I'm trading. And one of the things that I look for is what we call a captain setup. So a captain setup is a formation of 4 Renko bars in a row that basically the price.
Is that captain, like a captain of a ship?
Yeah, the Captain Morgan, captain of the ship.
Oh, Captain Morgan. Okay.
Yeah, that one.
All right.
So what I actually, the way I came up with that name is the price is capping from moving further. So instead of, capping does not sound good, but captain does. So here you go. The captain setup came about. So this is exactly, we just experienced one right now. So that's actually going to be a great one here. So you see 1, 2, 3, 4 candles in a row where the price tried to break below 767 and a quarter and failed to do so. On the 4th candle, that's your entry, which means that once the price hits that 787 and a half, automatically you have your order out there. And you are looking for a target of 10 points and you're risking 10 points on that structure. So you see this behavior happen on a daily basis. And you always have to ask yourself a question: what's the psychology behind the trade? Why does this structure work in a consistent manner? Is because traders always, you never know where they're going to do it, really, but when they do it, that's how they do it. And they come to price structure or prices in which they just fail to sell it further or they fail to buy it further. And whenever they do it in a row, meaning that the market hit that level 1, 2, 3, 4 times and reversed. Once they do that, they built up so many stops on both sides of the market that the upcoming expansion in price structure is always good enough for you to make 10 points.
Okay, is that someone's asking, is there a TF on Renko? And someone else is saying they're not time-based, they're all movement-based. So there's no time. It's not like a 10-minute TF. There is no time frame.
No time whatsoever.
Okay.
And that's by design. And
right.
The design for me, which really attracted me to this type of charting, is reduction of noise. Every time you add another element to your decision-making process, you add another layer that could go wrong. So if I take time out of my trading and just focus on motion, then I have half of the things to worry about.
That's beautiful. That's a pearl.
There you go.
Trade motion, not time.
Trade motion, not time. So, I could take you through this and show you. That's one that I traded actually, and that was a good one. And that is a short one.
You're a natural teacher, George.
Thank you, sir. Appreciate it. I enjoy it, and I have a passion for helping people understand complex equations like that, and it just gives me joy. So this is one of the other captain setups that we talk about. It's just they always behave in this exact way, and not only they behave here in NASDAQ, but they behave in gold. They behave in YM. In just about, they behave in the Forex market the same exact way. whenever they are stopping, that's how they stop.
A chart is a chart is a chart.
It's a chart across
just a
all
different
platforms.
title.
It's a behavior of people. You know,
okay.
it's people are behaving. So it's the same concept here. So you got the market ran up to that 144, hit that level. It did it twice, it did it 3 times, did it 4 times, and look at that wick. They actually tried to
run stops there.
You run stops right there, and then just failed it. And boy, what did they do after that? From 24, 50 points in NASDAQ.
Yeah.
Okay, so every 10 points is 200, so $1,000 per contract on that move.
Sansi is asking, do you leave a runner or take profit on all at plus 10?
Okay,
when you were talking about that.
Give me a second here. My Alexa is giving me a notification telling me I'm gonna trade good today. So I have her programmed talking to me. Yeah. So
give her a kiss.
If I do that, she's gonna start talking again. Rather not.
She might short out.
I know, short out, exactly.
So, all right. Well, so George, these captain setups and everything, and your demeanor and temperament, you know, I'm convinced that there are tools that, you know, anyone can learn and pick up some different arrows to put in their, you know, quill, tools that they could put in their toolkit. How do people get involved with you?
They can get involved with me, but before I answer that, I think you had a question for me from somebody in the audience. So let me answer that part first. And he was asking, do you leave a runner?
Right.
Okay. Sorry. So that runner is I hyper focus on an all-in approach. So basically, because I want to measure my probability very specifically to be consistent. So I go all in, all out. I have a target, I have a stop. Now, when we have a very hyperactive market and the market is giving a lot more than that 10 points, then I go all in on, for example, if I have 2 contracts, I'll take 1 off, then I'll go break even and just let that one roll.
Okay.
And I will, you know, then I'll have a big target. I'll have a big target because I don't want to give anything back to the market. Once I acquire, once I convert money to my pocket, it's locked in and it's done. It's not going anywhere. Okay.
Like that.
So
you know, I was asked, you know, I've talked about this before, and then maybe we could go to your website. But say, for example, you had a tremendous month or you had windfalls. Do you teach that people should withdraw some capital from their account and possibly maybe, you know, put it into something conservative, touch and feel the money? Because when it's in your account, it's they're just real digits. Yeah, when you touch it, it's real. And even go out and spend it and enjoy some of the fruits of your labor. Absolutely. Instead of leaving it all in their account.
I never do that. And I learned that early on in my career that the decisions I make in the market needs to translate into an actual something physical that I need to touch, because then it makes it becomes something solid that I can it becomes real, like you said.
It's tangible.
So, tangible. So 50%, excuse me, on a monthly basis, whatever I make, I take 50% of that. I put it in my bank account. I ACH it to my bank account. Then my goal for the next month is to make what I withdrawn and add another 50% to it. And,
nice.
And then take 50% of that, and constantly you're taking money as you're pushing your equity higher and higher. But the one important aspect of that is don't chase the money. Don't hyper focus on the money, because the money is a byproduct of proper execution, proper trading. So that's what I'm going to be focused on. But as a byproduct of that, that the equity curve should be 45-degree angle looking up, and within that curve you are looking to take money out at a 50% of your monthly,
Nice
loot.
rule.
Yeah. And that keeps you in the game. And because, I mean, ultimately, you're doing this for a living. I mean, that's what we're doing here. And,
Right.
you have bills to pay. You have things you need to take care of.
You have to get paid.
You have to get paid. We spend ungodly amount of hours in front of the screen trying to figure out this game.
Yeah, not getting paid.
Well, you need to get paid.
And facing losses at times.
Absolutely, and the emotional stress. So this is a very good business, and it needs to be looked at as a business. And at the end of the day, a successful business is paying its employees, paying its bills, and it's paying its owner. And you're the owner of this business. So so
I'm the man. I'm the man, George.
You're the boss.
I'm the
nobody
man.
else is. You hire yourself and fire yourself on a daily basis. You know?
I'm on furlough after we conclude this interview for half an hour. So, so how do people follow you besides your Twitter handle, George, and find out, about, what you charge to teach and what kind of services you offer?
Harmony Trading System, Harmony Trading System. Let me actually pull the actual website. Here we go. So you could go to harmonytradingsystem.com. That's me in my better days. I got much older after that picture, but I'm gonna keep it.
Was that from high school?
No,
I'm kidding.
No.
I'm kidding.
You could tell that I lost my hair trading, right?
It must have been geometry or something. Anyway, oh look, you're featured all over the place. Money Show.
Yeah, and you got you
Face. You've been on Face. I don't see that up there.
Well, I'm gonna have to add that one here.
Oh man,
absolutely.
I mean, that's how you know you made it.
That's right.
All
so
right.
if you click on that button, you go to Harmony Trading System, and here you could just sign up. And one thing that I'll do for all the audience in this group is I'll extend them 1 month free access to the room where they can see us in action on a daily basis, no commitments. Also, I'll send them the structure, the class that we teach our traders on the captain setup, so they can look at it in more details with the logic and the rules and see how that will apply to their own trading, and it's going to help them. So when they sign up, I'll get their email and they just send me a note saying I want that class, and I'll send that to them.
Well, interesting you use that word. I say we're all captains of our own ship. And if we take it into the rocks, don't blame anyone else. You had the helm. And George, thank you very much for talking about the psychology. I believe most of this is in our head, and there's a million ways to skin a cat. And appreciate you edifying Face today, George. Thank you, my trading warrior brother.
Thank you. I appreciate you. I appreciate everybody that tuned in, and you guys have a healthy, prosperous trading day.
Thank you, buddy.
All right. Have a
Everyone,
good one.
There's George Habash, and this guy does not trade out of tune. He trades in harmony. So thank you very much. And everyone, that's going to be a wrap. We'll see you for TGIF tomorrow. Mark Newton's going to be back with us. Had some technical difficulties yesterday. So see everyone tomorrow. See Ariel, Jeffrey, Coyote, DJ, and thank you once again, George.
Have a wonderful day.
Okay. Adios, everyone.
Bye-bye.
Don't just count your pips, count your blessings. See you tomorrow.